Welcome back to Chip Stock Investor. Let's get right down to the brass tacks. Nvidia earnings.
Silicon tax. We're going to get down to the silicon tax. Let's get right into it.
We're going to be talking about most important company in the world. I don't know.
You're using superlatives now.
I was, yeah. That's because that's what I see in headlines everywhere. But we'll talk about Nvidia today, and we'll show you our end market chart. And Nick, you've got highlighted the top bar because that's, of course, what we're going to focus in on: accelerated compute and AI infrastructure, which has been driving the entire market for quite some time now. And I noticed that you took the question mark off of the top right box there on the reaccelerating growth.
Indeed. After the earnings report earlier this evening, it was time to delete the question mark. And I think you'll see it immediately why that is. Let's take a look at NVIDIA's revenue trend. On the far left, Q1 fiscal 2026, the period ended in April. Data center, $39 billion, 73% year-over-year growth. Pretty incredible, led to 69% year-over-year growth overall.
All right, before we continue, want to give a quick shout out to the sponsor of today's video, finchat.io.
We're going to show you a couple of visuals from FinChat today. Really, really powerful research tool to figure out how businesses like NVIDIA, especially complicated businesses like NVIDIA, where there's a lot going on within even just these very broad revenue segments, like this one here, data center for NVIDIA. Powerful tool to get down into the nitty-gritty details of what's actually going on, learn about the business, and the key financial metrics, the KPIs that are really moving the needle the most for the business and thus therefore the stock.
You can get 15% off any paid plan with our link here in the description or on the video, finchat.io/CSI. That gets you 15% off any paid plan, finchat.io/CSI.
Got this visualized for you with FinChat, illustrating how dramatic this is. Data center revenue in green, and that is quarterly, not annual. That is quarterly revenue, $39 billion. And then everything else, gaming, ProViz, automotive, and other stacked up on top of each other just to the right. Just one quick point here to remember, it's called data center revenue, but there is a lot of different industry verticals going on in data center. NVIDIA powering a lot of different industry research and development. So a lot of actually automotive revenue, for example, is housed within that data center segment. So just a little footnote there. And so let's talk about the re-acceleration of the accelerated computing and AI infrastructure market. We had Computex last week, right? There was a lot of talk about NVLink Fusion. NVLink is the assets they got from the Mellanox acquisition a number of years ago. That's the GPU to GPU interconnect business. NVLink Fusion opens up the ecosystem for other companies to custom design chips within NVIDIA's ecosystem. Remember, the power of NVIDIA's business model is the leverage over the supply chain. They are very much flexing that muscle over the entire data center supply chain with NVLink Fusion. And another end market vertical within data center, of course, is robotics. NVIDIA continues to think that the robotics revolution is here. We, of course, think there's a bit more time before we see humanoid robots running around town, picking up groceries alongside you at the grocery store,
Wreaking havoc.
But the R&D has to happen long before the actual robots become a commercial thing. And so NVIDIA, probably one of the most powerful, if not the most powerful R&D platform for robotics. So that was another announcement at Computex. Groot N1.5 and then Isaac Groot Dreams. So lots of just new platforms for synthesizing data to train these robots, make sure they have real world use. All of that housed within, of course, the data center segment. So here's where the reacceleration comes in. They just did $39 billion in data center revenue, $44 billion overall. In Q2, revenue is only expected to be $45 billion. So that actually looks like a deceleration from Q1 to Q2. For the last 2 years, Nvidia has been increasing sequentially about $4 to $5 billion total in revenue due to the data center business. However, if you add back the loss of the H20 business, the H20 being the custom hopper chips that they were making for the market in China, if you add the loss of that back into Q2, which they estimated at $8 billion, $53 billion, NVIDIA was actually going to have the biggest quarter over quarter revenue increase ever, like a perhaps 9 to 10 billion quarter over quarter increase. So the reacceleration actually is already here. We don't have to wait until July, August for that reacceleration in the market. It appears it's already happening.
It looks like they're increasing their earnings per share on a GAAP basis, expected to be up 38% year over year. And then the adjusted earnings per share up 44% year over year.
Also impressive considering basically they just got closed out of the China market for now.
Nvidia always looking expensive.
This is just for illustrative purposes, kind of the challenge with a cyclical business like Nvidia, because if you try to do a traditional valuation assessment on a cyclical business like this, any semiconductor business that exhibits a high level of cyclicality and those cycles are very fast, 2 to 3 years, it just always looks expensive. And so even if you're in the midst of an end market downturn, which for NVIDIA, that's essentially what we've been in for the last 6 to 12 months as we were waiting for Blackwell to ramp up, it showed up on paper as just a deceleration in revenue. But for all intents and purposes, it was sort of a cyclical down as we were waiting for Blackwell. When you're in these cycle bottoms, the stock never looks cheap. And it's because you're looking at trailing 12-month earnings, like in this slide, earnings per share, free cash flow, it doesn't matter. You're looking at trailing 12-month earnings and free cash flow that are depressed because of the down cycle. So it always looks expensive. And this is why understanding the industry and the end market sales cycle is so important and why we try to keep those end market charts and the industry updates coming quickly. So it looks like the cycle is over. No, NVIDIA stock is not cheap, but can we ever reasonably expect it to look like that? Probably not. It's just the nature of business and the industry it participates in. We are very optimistic for the second half of 2025. Very happy to be shareholders.
The earnings were as expected, but it's always exciting to see how much innovation they've got going on there.
There's a ton
Yeah, it's pretty
of stuff
amazing.
going on.
And it's easy to get excited about something that they're so excited about, they're so passionate about.
Yeah, and deliver on the excitement
Yeah,
too.
actually deliver, which is a key ingredient, huh?
It's a nice little bonus.